Well, good morning. Happy Monday. It is September 18th. Want to share with you the latest data here in the Austin metro area. Starting with interest rates again, this is just a look at where we were as of last Friday. Still sitting right around 7.25. We've kind of been in the sevens since late July, so we're getting very close to kind of the 60-day mark. Where interest rates have been 7 to 7.5, but quite honestly, really very close to that 7.25 mark. And so the market's going to start getting used to that number. It does not mean more buyers are coming out, but what it means is people are starting to see certainty in what they think they will pay in terms of an interest rate when they go out and buy homes. Unless that gets more volatile, I think we're going to see these numbers kind of hang tight as we go through the fall buying and selling market. So basically, any product that buyers are getting right now, we're hovering somewhere in the high 6 to low to mid 7 range, with 7.25 on the 30-year fixed being the most obvious. How's that impacting Austin? So this is a look right now at active versus sold listings. See if I can boost that up for you a little bit. So again, green is number of active single family homes, not condos, townhomes, land, duplexes. That's different. This is just single family homes to show you kind of a clean chart. This is last fall. Here's the spring, but we're not seeing the bell curve drop back off just yet. We're kind of still just hanging out at just under or at 11,000 homes on the market. The blue is sold or closed homes every month. So we kind of peaked out back in May, which is really your spring buyers, your March, April buyers closing in May. Since then, numbers have already come down. Last month in August, we sold around 2,800 homes. So not a ton, especially when you compare that we have about 11,000 on the market. So we're still sitting around that 4 months of inventory mark. It's too early in September yet to see that data. It's going to take a while for the September data to fill up. I expect, though, we're not going to see more than 2,800 homes. I think we might even see less. So the sold comps are maybe starting to trend back down, but the inventory is kind of staying flat, which really means days on market's going to continue to grow as we look to move these homes. This is national. This is from John Burns Research and Consulting. They're a major research and consulting firm that looks at real estate. So this is their home value index, which is above the 2022 housing cycle peak. Okay, so at the top of the chart, these are markets that are still appreciating, the ones in blue. The middle is kind of, not appreciating, but not decelerating. And at the bottom is the decelerating markets. Austin is at the bottom of the chart. So we have lost about 12% of our home value since the peak. Not surprising if you've been watching my videos, but Austin is kind of leading the pack. San Francisco, the East Bay, which is like Oakland and Berkeley, those markets, Phoenix, Vegas, Sacramento, Seattle, San Jose, San Antonio, and then kind of it gets to the middle ones, -1 or +1. You got Denver, Portland, Dallas, San Diego, Houston. As you go north, the top markets are Chicago, Philly, Indianapolis, and Miami. So, real estate is not national. These are local specific incidences of what's driving each one of these markets. Some of these markets that are going up right now did not see as big of a climb during the pandemic. They might have even had some pandemic flight, which means people leaving the market, like Miami, for example. Maybe a lot of people left the condo market because nobody wanted to be cooped up in a condo during the pandemic. And now they're coming back. They're coming back to Miami, or they're leaving other markets to come to Miami. And that's helping accelerate the Miami market. In Austin, we have kind of the opposite problem. We were the number one, if not in the top 2 pandemic drivers. Everybody was coming here. All the money was coming here. People are still moving here. And so we had a huge amount of growth, just unprecedented price increase. And so since the peak, we've come down about 12%, but we are still up, I'd argue, probably 50% more than where we were early 2020. And so what's happening is we are right now the number 1 city for building multifamily apartment complexes, and we are the number 1 city for building single family homes. On top of that, we have a lot of infill new construction as well. So when you have all that demand, you also had developers trying to keep up by building tons and tons of supply. So our pipeline is really deep. But what's happened is when demand goes down and you have a rapidly growing pipeline of supply, what's happened is it just kind of floods the market accidentally with more supply than what's needed for the demand like that. And that's what's helping soften the prices. During the pandemic, I think sales for new construction was around 11%. So in other words, 89% of the sales were resale homes or condos and 11% was new construction. Now it's about 35% is new construction because they can make up the difference and they can also offer incentives to buyers, whether that be interest rate buy downs or closing cost credits, things that it's harder for a resale homeowner to do. So that's why Austin is kind of sitting down here on this list. But if you went through every one of these markets, you'd get a different story. And that's why I think real estate is really interesting. But, Austin needed to cool off. It was crazy hot. It's going to have its moment where it's going to have to cool off. But the job growth is coming. Oh, the last thing I want to mention is we have a tech hiring freeze happening right now as well. What does that mean? Most of the tech companies in town are not doing big hiring sprees right now. And so, you don't have the new jobs coming online to kind of keep up and fill the demand pipeline, but you also have current employees who are making a good salary and could afford a home, just kind of sitting on their hands because they're just not sure what their company's going to do. So until they get the green light that everything's safe and, their job's going to keep moving forward, you've got a lot of those buyers that are sitting on the sideline. So that's also, especially Austin, San Francisco, East Bay, Phoenix, Seattle, San Jose. Those are the ones in red. Those are tech cities. So that's what's happening is you're also seeing a tech hiring freeze. All right. Hey, before I go, I want to share with you some rental data. So this is a look at what's happening in the rent market here in Austin. I know many of you would want to see this. So the top chart is single family homes. The bottom chart is duplexes. So since August of 2022, leases on single family homes that are being advertised has gone up about 8.5%. Signed leases has gone up about 8.5%, but listings has gone up almost 21%. So we have more listings than we have signed leases right now, which means it's putting downward pressure on rents a little bit. And like I said, we talked about that supply of multifamily apartments coming online. You have sellers that can't sell their homes, pushing them into the rental market. So what's happening is it's swelling the supply of the rent market, and that's helping bring some of the rent prices down. Not a ton, but a little bit. And then days on market obviously is going to go up because now you have more supply than you have tenants. And so it's increasing that market as well. On duplexes, it's a little more noticeable. You have 37% more listings than you had this time last year. You have fewer leases. And so the rents are kind of holding steady, but they're not going anywhere either. Duplexes probably compete a little more with the apartment market than a single family home. But again, we're seeing days on market growing from, almost 75% on those. So the rent market is seeing a little bit of pressure, although I'd call the rent market fairly flat. It kind of depends on where your property is. If you're out in the suburbs or if you're competing more with apartments, you're probably feeling it more. If you're in a great location, good condition, most of these properties, they're still leasing fairly fast. They're leasing within a month, but they're not leasing in a few days like they might have in the peak of the pandemic. Anyways, I hope this was helpful. If you are a seller right now, obviously, you know what's happening. You got to pay attention to the inventory. You have to pay attention to your competition. Interest rates are starting to hold steady, but they're holding steady at a pain point that's making it hard for consumers to kind of have a mortgage on your property. And so be flexible with the buyers that are coming in with offers. Know that there's going to be some negotiation there. If you are a buyer, your pain point obviously is the interest rate, but your opportunity is the fact that there's not a lot of demand in the market. There's not a lot of competition for you. You have an opportunity to talk with sellers, talk with listing agents, and try to work a deal on your property. I think we're in the meat of the fall market right now. Between now and probably early November is when I expect the fall market. And then we start hitting the winter market as we get closer to Thanksgiving. So if you're planning to buy or sell in the next few months, we'd love the opportunity to talk with you more deeply. But let me know what you think of this data. You can follow us at Ryan Kelly Group on YouTube to find all these videos. Until then, enjoy your week. Hook 'em. Talk to you soon.